a MSME standpoint that were useful: access to credit, liquidity, and resolution. From an access to credit standpoint, the Indian public sector banks have been actually asked to develop their own credit scoring models based on digital footprints of MSMEs, so that credit underwriting can be more focused and quality of credit can be better, as well as more credit can be provided. Second, liquidity. Using the trade receivable and discounting platform and opening it up to a larger set of participants for buying receivables helps provide a greater amount of liquidity to the MSMEs. And the third piece on resolution, which is essentially in terms of regulatory forbearance being provided for those stressed assets for these MSMEs that actually fall into the special mention account category, and where they fall into the stressed assets due to circumstances beyond their control, to actually help them get through that. This is one of the first regulatory forbearances that have actually been provided from an MSME standpoint. So it's a pretty interesting initiative in terms of how they're looking at the MSME space. From a banking standpoint, something that has been interesting, especially for foreign banks, given that, from a Grand Thornton Bharat standpoint, we have always been focused on contributing towards a Vibrant Bharat initiative. And one of the reports that we released 2 years back focused on how rationalization of tax rates for foreign banks could really help the country benefit more. Seeing the rationalization of tax rate from 40% to 35% is a step in the right direction. Couple of other initiatives from a capital market standpoint. There was this whole worry of over-financialization of capital markets, which is where the whole security transaction tax to discourage the investments in the F&O segment. The focus is very simple. They want the investors to focus long term, which is also why the National Pension Scheme has been elaborated to cover a larger set of people. So since the child is born, you can actually make investments, which allows us to have a broader asset base. They want people to save for the longer term and not take a short term approach. Couple of other initiatives from a digital public infrastructure standpoint, especially from a land registry and a farmer registry standpoint, helps to create far more mainstream data for the purpose of effective credit underwriting. That is genuinely going to help a lot of financial institutions to be able to lend better. Goes very well in line with why they expect SIDBI to actually increase the number of centers so that they could actually extend direct credit to customers. These are some points from a financial services standpoint that were there. While always we would love, to want more, and while we would have loved to see some bit of more announcements on regulatory framework around AI, more around insurance, essentially around risk-based capital and solvency. But we are pretty sure that given the way the principles have been laid down for building a sustainable growth trajectory, we are sure that these aspects will be addressed as we move forward.